Financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
Friends, welcome to this week's edition of Follow the Money Weekly. So glad that you're joining us. Welcome to all of you all around the world. I got to give a shout out, though, to all of our listeners in Hong Kong. We noticed a huge increase in Hong Kong listenership. I don't know if we got listed on one of the blogs over there, whatever the case might be, but we got a lot of listeners now tuning in from Hong Kong, no doubt, partially because of the recent episode we did on It Was Time to Buy China Now, that new Hong Kong-Shanghai Connect between those two countries, allowing them to purchase each other's shares that had been previously unavailable to Western investors and to Hong Kong investors, now being able to invest in China, and people in China able to invest in Hong Kong. So anyway, welcome all of you from Hong Kong and many of the other countries that are joining us around the world. As you know, we beam to you every single week right here from the United States, right in the belly of it, right in the center of it, in Northwest Arkansas, where we have our headquarters here, little mini ranch, trying our best to get off of the grid, as we've told you before, as we see the meltdown of society. Of course, we saw the Ferguson ruling this week. Yeah, the world didn't come off of the wheels didn't fall off, and that was a good thing, although no doubt the decision has been extremely controversial, splitting people right down the middle. It seems half of the American people are happy and half of them are not so happy. So just more evidence of our gridlock here in the United States. Listen, today we've got a great podcast for you. We're going to talk to Tom Cloud. Tom's going to join us, and he is going to share with us some insights on precious metals this week. Kind of a slow week, though. Remember, this is Thanksgiving week, so we wish each and every one of you a blessed Thanksgiving, but also know that it's not going to be very busy in the markets. The trading is going to be very light this week because of that. Holiday weeks are always like that. Also, Jay Peroni, a certified financial planner from our Christian Financial Advisor Network, will be here. He'll be talking about two of his portfolios that have been doing very well. First is the PACE portfolio, which is a portfolio that I created several years ago and then gave to Jay to manage, and now he actively manages the PACE portfolio. That's precious metals, agriculture, commodities, and energy. Many of you know about that. You can find out more at paceportfolio.com. He'll also be giving us an update on his very popular Israeli-based portfolio. It is a Genesis 12 portfolio, and it's 12 stocks that invest in Israeli-based companies. You can learn more about that portfolio at genesis12portfolio.com. We'll have Jay on the program a little later to talk about that. There's a whole lot of things we could talk about today, but you know what I'm going to focus on today? I'm going to focus on 5 reasons why I own and physically hold gold. 5 reasons why I own and physically hold my gold. All right, now listen, before we start these 5 reasons, I've just got to lay it down that you know that I am a believer in precious metals. I'm a believer in precious metals, gold and silver, and I want to lay out to you today some of the most basic reasons for my bullishness on gold as something to own. So let's just go down the list. I've got 5 reasons here, wrote these out over the last couple of days, and I wanted to share them with you. So number 1, why do I own and hold gold? Well, number 1, gold is money. You know, for millennia, humans have considered gold as the ultimate store of value, the ultimate unit of account, meaning that they can use it to settle transactions, and also the ultimate medium of exchange. In other words, gold has long been viewed as money. It doesn't matter how much paper money that they create, no amount of paper money can change the fact that gold for millennia has been viewed as money. And in recent years, mankind has foolishly believed that paper currency issued by government fiat can somehow replace other forms of money, such as gold, that have intrinsic value, which is a mistake. You know, all throughout time, if you go back and take a look at the value of gold, gold tends to hold its value. There's that old saying about a man's suit, that back in the Roman times, an ounce of gold would have bought you a nice Roman toga and a nice pair of sandals, the whole 9 yards. And if you fast forward now to today, an ounce of gold will buy somebody a nice man's suit and a pair of shoes to go along with it and some accessories. So it's held its value. Now compare that to the U.S. dollar, which just continues to sink like a rock, down 95%. I've even seen estimates of 98% down, losing its purchasing power by that much since 1913, whenever the Fed was first installed. So reason number one why I own and hold physical gold is because I view gold as money. It's always been viewed as money throughout history, except for this recent time where we have this fiat paper money experiment, which I believe will inevitably end in a negative manner. Now, I just mentioned intrinsic value, and that really is the second reason why I own and hold physical gold, because gold exists only in finite supplies, and therefore its value cannot be derived by a simple government edict or a decree. There's nothing that the government can do or say that forces the intrinsic value of gold to change or shift. Now, they may try, but the breakdown of the Bretton Woods arrangement in 1971 proves otherwise. In contrast, during the Bretton Woods arrangement from 1944 till its breakdown in 1971, the global monetary authorities sought to peg the dollar to gold at a ratio of $35 per ounce. But price fixing doesn't work, and they found that out rather quickly whenever the Bretton Woods system collapsed. But if you compare gold to the modern paper currencies that we have today, you'll find that these modern paper currencies have no intrinsic value. The only difference, by the way, between a $100 bill and an old piece of worthless scrap paper is that the government says that the $100 bill has value. But this value is not intrinsic, meaning that the $100 bill does not hold value in and of itself. Like an old piece of scrap paper, it really only serves a few purposes, namely to burn or to throw away. So the paper, even though it's printed on and even though they've painted pretty colors on it and pretty little emblems and symbols, and in fact many of these logos are completely pagan and Masonic in nature, these fiat paper currencies have no intrinsic value. Government cannot perpetually confer value upon mere pieces of paper and expect to have a sustainable economy and a sustainable monetary system. It just doesn't work that way. So reason number one why I own and hold gold is because gold is money. And it always has been, and I believe it will always be money. Number two, I hold it because gold itself has intrinsic value, and I am attracted to things that have value in and of themselves. I want to hold those things. All right, reason number three why I like to own and hold physical gold. Well, it's pretty simple. I don't trust the federal government. I don't trust the monetary authorities. And in fact, when I buy gold, it's a vote against these paper currency systems. It's a vote against the trust or faith that might be held within these governments. By owning and holding physical gold, I am able to insure myself against Washington's inept policies. If you think Washington has inept monetary and fiscal policies, then one way to demonstrate that is to purchase gold. Now, I don't do it to be an activist. I'm not trying to buy gold just to prove a point to the United States government. I literally buy gold because I fear the inevitable decline that will come as a result of these inept policies that are emitting out of Washington. Paper money is a modern experiment which ultimately is headed for a brick wall, in my opinion. And there are already growing movements around the world to restore gold as money and to allow gold to once again play an integral role in national monetary policy. Now, one such move that we've seen recently is the Swiss Gold Initiative. And this has been getting a lot of airplay lately. A lot of the media has been covering this, not an extreme amount. In fact, if you turn on CNN or Fox News, you aren't going to hear too much about it. But in the international press, there is some interest in this, especially in the financial press. This is a really big story. On November 30th, Swiss voters are going to head to the polls to decide on a measure that would require the country's central bank to hold 20% of its total assets in gold. Now, if this initiative passes and is approved, the Swiss National Bank would have 5 years to meet the gold reserve requirement. And as you can imagine, the proposal has been controversial to say the least. The initiative was launched by the way, by the conservative Swiss People's Party, and represents one of the strongest challenges to date of the current global central bank Ponzi scheme that continues to plague our global economy. When you think about it, all these central banks around the world are printing money today out of thin air. Today's fiat paper currencies are backed by nothing except government IOUs and promissory notes. And the good people of Switzerland have decided enough is enough. The Swiss currency has tanked in recent years after the Swiss National Bank tied the fate of the Swiss franc to the euro back in September. It was in the fall of 2011. The central bank agreed to prop up the euro by not allowing the euro's exchange rate to trade below 1.2 Swiss francs. Now, since these measures were implemented back in the fall of 2011, the central bank's holdings of euros have exploded. The portfolio of the Swiss National Bank now is composed of 50% euros, while its total gold holdings have been cut in half during that same time, and now represent just about 7.5% of the Swiss National Bank's total assets. Now, if this initiative, which again is scheduled to be voted on November the 30th, just a few days away, if this initiative is successful, then the Swiss National Bank will be required to sell much of its excess euro holdings and purchase instead the shiny yellow metal, gold. Approximately 1,500 metric tons would be required for purchase in order to bring the Swiss National Bank's portfolio into alignment with this new initiative. Now, it probably wouldn't surprise you to know that nearly all of the higher-ups in Switzerland are completely against this initiative. Just like a criminal hates handcuffs, a central bank hates gold because it represents a constraint. It prevents the bank from doing what it wants to do, namely to create more debt. Now, inevitably, some have been looking for ways to invest around this Swiss initiative in order to make money off of it. In other words, to speculate. One idea, of course, would be to buy gold ahead of the vote, because if it does take place, then certainly gold will jump as a result. Although gold has risen a little bit over the last several weeks, perhaps not in direct relation to this initiative, but nevertheless, gold has crept up a little bit. Now, the Swiss franc, a different story. It's completely gone up. In fact, it's recently reached a new 2-year high, and it's trading up there. So probably wouldn't be a good idea to try to speculate with the Swiss franc to buy it. But if the initiative fails, a better trade might be to short the Swiss franc, as it will inevitably go back down. It's currently trading at a high, perhaps on some optimism that this bill will indeed go through, or this initiative will happen. But I tell you what, if this initiative does indeed pass, more nations should take note, because forcing responsibility upon the national governments like the Swiss People's Party is attempting to do in Switzerland may be among the few remaining options and solutions that we citizens have in preventing the monetary madness of nations around the world. By forcing them to hold gold, in some ways we can impose constraints upon their debt creation and upon their monetary madness. So reason number 3 why I own and hold gold is because I don't trust the government. Reason number 4 why I own and hold gold, well, it's a pretty basic reason. If you take a look at all of the smart money around the world, all of the central banks, many of the very top wealthiest people in the world, many of them have good exposure, or I would say at least some exposure, to precious metals. This is very different from the average American or the average middle-class person today who has virtually no exposure to gold. It's a bit ironic to see the wealthy owning gold and then constantly maligning gold in the press. You know, gold is a lot like life insurance in this respect. Hardly any person of measurable wealth chooses to rent his life insurance by buying term life insurance. And yet term life insurance is pushed upon the masses as the best insurance to buy. But what insurance companies don't tell you is that they only pay out about 4% of the death penalties associated with term life insurance. So term life insurance in many respects is the most expensive form of insurance that you can purchase, because the chances of you actually getting any sort of payoff from it are around 4%. Instead, there is a 96% chance that the insurance company is going to take all of your premiums and put them in their pocket and then not have to pay you a dime. Well, I tell you, I'd push term insurance all day long if I was an insurance company. I learned this lesson about permanent versus term insurance whenever I was a financial advisor. I met with many wealthy individuals, many wealthy clients, and many of these top corporations often provide a tremendous amount of executive compensation to their upper management in the form of permanent life insurance. That's how they fund many of these executive compensation strategies and schemes. What you won't find in many of these executive compensation schemes is any kind of term insurance. Instead, they use permanent insurance. In other words, rich people demand permanent while telling the poor to buy term. It's really no different in the rest of the financial planning world. The wealthy elites own gold while telling the poor to load up on stocks and to buy other gadgets and to invest in other things. It's a scam. Gold is no one else's liability. There is no claim on my gold, and therefore there is no counterparty risk. This makes it very attractive to me as a part of my asset mix. And then finally, there is reason number 5 why I own and hold gold, and that is simply for the sake of diversification. Many of you know that I have created something known as the Diversified 6-Month Liquid Savings Account, which is known as the DSL account, and we diversify that in thirds, 1/3 in precious metals, 1/3 in foreign currencies, and the other third in U.S. dollars. That's how we save our 6 months liquidity. By diversifying our savings, we've been able to greatly outperform the return of simply like a 3-month T-bill or a simple savings account. So we use gold for diversifying our savings, but we also use it to diversify investments. I believe in being spread out with my assets, and I really don't like the idea of having more than 25% of my investments in any one particular asset class. Personally, I like to invest in real estate, I like to invest in stocks, I like to invest in precious metals, and I like to invest in my own business. So those are the 4 areas that I like to focus on overall. So just a real quick recap on the 5 reasons why I own and hold gold. Number 1, gold is money. Number 2, gold has intrinsic value. Number 3, I don't trust the government, and gold gives me insurance against an out-of-control government. Number 4, the wealthy own it and then constantly malign those who do buy it in the press. That tells me a whole lot. And number 5, I need to be diversified, and therefore gold gives me a unique type of diversification that I can't get through a 401k, an IRA, or some other investment vehicle.
Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
This is a week that we really have to start thinking about getting into gold and silver. I mean, we've waited and watched this market move down, and then in the last week we've seen it come up, gold $70 and silver about $1. And now there are a lot of things happening that will culminate around December 4th that we feel will be very strong for gold and silver going into the new year and even into December. First of all, we saw the dollar hit an all-time high on Monday, or a 4-year high, on Monday at 88.35, and I wouldn't be surprised to see it run out maybe 1.5% to 2% more and get up around 90 on the world index. So we're watching that real close, and we think that no later than December 4th, we'll see that dollar change as the ECB is having a monetary meeting in Europe, and almost everybody thinks with the vast amount of money that's moved out of the euro and into the dollar, we'll see a lot of it coming back home because things are going to get somewhat straightened out. So the December 4th is something we're going to watch very, very closely at the ECB, where we could get a dollar reversal, and that dollar could be as high as 90 when it reverses. And over the next few days, we could see gold neutral but we do expect to see a jump after December 4th, and we're getting a lot of confirmations on that from some of our sources. And, of course, one of the sources that has come out that everybody's talking about is Andy Mann and Mike Sir. They're two Canadian traders that parlayed $1,600 into $1.7 million on shorting silver, and they're now on the verge of going long. They're waiting actually on the same exact things we're waiting on to see what happens on December 4th and also on November 30th in Switzerland on this coming Sunday when the public votes whether to monetize their currency with gold and have a 20% backing and work it up to 40% over the next 4 or 5 years. And right now, it's still too close to call. It's one of these elections that we saw the uncertainty develop over the weekend where there were only 15% people undecided. And in one poll this past weekend, 35% people now are undecided. They're very confused about the ads that are being run on both sides and what it really means to them as a citizen of Switzerland and their future in the world economy and staying tied to the European community. So it's going to be a very important vote, and we're going to watch it very closely, but it is too close to call. But certainly we do think there's an immediate $20, $40 factor up in gold, and silver will follow if it does pass. So we'll know about that next Monday, which is very important. The other news that has everybody excited is the Netherlands bringing their 115 tons of gold that was stored in Canada, U.S., and England back home, and this basically wipes out what many people believe the Fed has in the U.S., rest of it that the old Germany and other countries is leased out, and they don't have the physical gold. So if anybody else demands their gold from the U.S., this thing could see gold accelerate at a very, very fast pace. And you just can't, when you look at the warehouse receipts in Europe on the COMEX, it's something like 86-1 last week, 86 people claiming they own gold when really the only person that owns it is the person that has it in their possession. So you're going to see more and more of this as people can't, the ones that don't get possession of their gold will get nothing back except a check. They won't get any gold, and if that happens, of course, it's going to accelerate both gold and silver up substantially. The last thing I want to comment on this week is the continuing supply problems that we're seeing across the board. We are working on a silver deal we hope to have out in the next 24 hours on Silver Eagles that will be immediately available. But right now we have the Maple Leafs on a 3-week delay, and we have the Silver Rounds on a 7 to 10 day delay, and we have the 100-ounce COMEX bars on a 10 to 14 day delay. So the good thing is you can still buy them and lock them in, and when you pay us, you get in line to go out, but we do not pay the supplier with your money. We keep it in escrow, as most of you know that have been our clients for a long time and gone through periods of time when demand is outstripping the supply very quickly. So this is very important, and the main reason we think silver will adjust back up into the 19s. I'm talking about a 20% move in the near future just to get back to mining cost, and certainly we're seeing that from the people that are ordering silver for delivery. It's very important to realize that historically this is very, very good for the price of silver, and when it does move from one of these events I've talked about today, it should be at least a $3 up move, which is approximately 20% just to get back to where mining cost is worldwide. So you really need to be moving in. You're not going to have much more time, in my opinion, to get in at these prices in silver. Gold could trickle a little bit lower the next few days, but I would be in by December the 4th. If any of you need to talk to me, you can reach me at 800-247-2812. That's 800-247-2812. And if you're interested in a precious metals IRA, we can help you set that up. There are certain criteria you have to do to be able to hold gold and silver in a precious metals IRA along with platinum and palladium. I didn't comment on palladium today, but it's like a broken record. It's back up in the 800 range, and we think it'll move up to that 900 range over the next 30 to 45 days. And then lastly, if you're still holding rare coins, As I said, we've only seen a 70% move in rare coins over 14 years. During the same period of time that gold has gone from 250 to 1200, a nearly 500% move, and we think that's going to continue. So if you have rare coins, it's a good time to get out and get switched over to gold and silver bullion while the prices are low. With this week's Precious Metals Market Update, this is Tom Cloud signing out.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. Well, joining me on the line now is my good friend and certified financial planner, Jay Perroni. You know him well, no doubt. He actually runs a show on our FTM Daily Radio Network known as Investment Themes and Strategies. He is also the portfolio manager for our very popular portfolio, the PACE portfolio. That is the Precious Metals, Agriculture, Commodities, and Energy portfolio. And he also runs the Genesis 12 portfolio, which focuses upon Israeli-based stocks, which has really had quite a good run. Israel's done really well, the stock market, over the last several years. Hey, Jay, great to have you here.
Yeah, Jerry, thanks for having me on the show. I'm really excited to be here.
Oh, of course. Let's talk real quickly about how the markets have been doing. No doubt the stock market has been rising nicely. I'm sure that many of your portfolios have been rising right along with it. What's your take on the overall market right now? I know you're pretty bullish as we go into the end of the year. What's driving your bullishness?
Yeah, basically, since the market bottomed in October, we've seen a rise of about 10% in the S&P 500, and it's a number of different factors, but the most important factor in driving the markets is profitability. When companies report strong earnings, it's going to drive the prices of stocks. And we're seeing a lot of these companies that have reported earnings. We've seen about 90% of them report earnings so far for the third quarter, and most of them are beating their earnings estimates. And that is great news for the stock market. Doesn't matter what the world's doing. Yeah, it certainly has some influence on the markets. But when we're looking here in the United States and all these companies are continuing to beat their earnings estimates, stock prices can continue to go higher. And I believe we'll continue to see that through the end of the year and into 2015 as well.
Okay, so you're expecting a really good run in stocks as we go forward. I'm expecting the same thing. I mean, there's no doubt that the Fed is continuing to support the market. There is always the case, the bearish case to build, that we could certainly see a pullback like we saw in October. What did that surprise you? The big dip we had in October, and probably what was even more surprising was how V-shaped that whole thing was. It went down and then went straight right back up. It was kind of bizarre, wasn't it?
It was very bizarre, but you had really a lot of uncertainty, and investors hate uncertainty. We had the whole scare with Ebola. Was this going to be a, health crisis? Then we had, Europe slowing down. We had China and, war in Russia and sanctions and all these things coming together all at once. So it was kind of like storm clouds just kind of building, and people were waiting for this huge storm to come. And as we started to get answers on each of the the different crises, Ebola wasn't as bad as we thought, and, China wasn't as bad as we thought, and Europe wasn't as bad. So as we started to get some answers, people started to feel more comfortable with going back into stocks. So it was very short-lived. Those concerns can still pop up at any moment, but for the time being, it has helped investors have a little bit more confidence to keep buying stocks.
Yeah, there's a few things on the horizon. Certainly the first thing is the fact that, I guess in March, the Congress is going to be retaking up the idea or redebating, I guess, the debt ceiling. Something that they've just delayed for so long, and we know that in the past that has not been good for stocks. That creates a lot of uncertainty. So I guess in March we could see some turbulence, no doubt, but you're expecting in 2015, based upon your analysis, that we're going to end higher with stocks overall by the end of the year. Is that your assessment?
Yeah, for next year. You mean 2014 or 2015?
2015.
Yeah, 2015 I see as kind of a slow growth year. I think it's going to be a positive one for the markets. I don't see it being a 20 or 30% gain year, but I do see high single digits, even low double digits for next year as well. As long as corporate profits keep rising the way that they have, I don't see any reason we can't go to Dow 20,000.
All right. Well, that's interesting. All right. So let's talk about the PACE portfolio. That's something that you and I put together. I built that, several years ago and brought you on, and you've been managing it ever since. And it's really done very well. It's precious metals, agriculture, commodities, and energy, 20 stocks that focus on those. Tell us how it's been doing this year and what changes we're making. Just kind of give us an update on the PACE.
Yeah. One of the big things that kind of, I think, caught you and me by surprise a little bit was the fact that the dollar has been so strong. And a lot of that has to do with just foreign investors. We have nearly 20% of U.S. stocks right now being owned by foreign investors. We have global interest rates across the board being, taken down a notch, and that's making U.S. bonds look more attractive. And then also with the euro and the yen being so weak, it's creating demand in the U.S. dollar. So we have a strong U.S. currency, we have strong U.S. stocks, and strong U.S. bonds. So that force has really put a positive spin on the U.S. dollar, bringing it up. And that has had a negative impact on oil prices and also precious metals. So those have been some of our weaker positions in the portfolio. So what we've done is essentially reduce the precious metals exposure, at least for the short run. Same with energy. We've reduced our exposure in oil-related companies and added some coal and some other commodities that we feel were kind of at their bottom. Things like corn that we believe are going to rebound, and it has rebounded, and coal, which we believe is going to rebound as well, and that position's done pretty well as also.
You can learn more about our PACE portfolio by going to paceportfolio.com. paceportfolio.com. You can learn about the philosophy there, about what we're doing with that portfolio. How has that performed so far this year, Jay? I know
it's up about 2% for the year. The good news is the long-term trend. We started, managing this 2012, and if you started right from inception, it's up about 45%. So that's pretty phenomenal to have stock market-like returns with less volatility and less risk. So I really like the direction of where we are right now with some world-dominating companies. We have a few in the portfolio that are up over 50%. We have Hanes Brands is up almost 75% since we bought it. VF Corporation up 51%. AbbVie, a healthcare company, up about 58%. And then we also have some key energy stocks that have done really well. Magellan Midstream up 61%, and then EQT Midstream Partners up over 200%. So we've had some great winners in the portfolio, and I believe we're going to continue to find some great opportunities in the months and days ahead.
It's just a great testimony a testament, I should say, to the diversification that's possible. Because during that time, you said 2012, whenever you stepped in and began managing the portfolio, we've seen a continued drop in gold prices, in silver prices. No doubt oil prices have come down since that time. So But because we've been diversified, we've been able to make money even though those assets are going down. So that's a really great thing about it, diversification. Okay, so let's move on and talk about your other portfolio. You have several portfolios, but let's just focus on these two, the PACE. Now let's talk about the Genesis 12 portfolio. I was really excited whenever you announced the creation of this one. This one focuses upon Israeli-based companies that you believe will outperform in the long run. And so far, this portfolio has done very well as well. Tell us about the Genesis 12 portfolio.
Yeah, basically it's 12 different Israeli companies that meet our moral and our financial objectives. A lot of these companies, because Israel is such a hotbed for some of the greatest minds in the world, there's some great innovation going on inside of Israel in both the healthcare and the technology sector. So that's where we focus a lot of our time and energy, is finding some of the greatest technology and healthcare opportunities. And right now, we've had a very strong tilt toward technology. There's a lot of growing companies there that are just coming up with these earth-shattering technologies that no companies in the world are coming up with. You know, some of the great minds like Apple and IBM and some of the biggest players here in the United States are outsourcing their mind power to Israel, finding some of these key leaders and trying to get, how are you doing this? So a lot of the companies that we own in the portfolio are technologies that are innovating the entire world. We have a company in there called Mobileye, which they're coming up with how to drive cars without needing drivers. So driverless cars, it's such a phenomenal technology. That's just one example of the type of company we're looking for in the Genesis 12 portfolio. Also 3D printing, all kinds of pharmaceutical breakthroughs. And these 12 companies have done phenomenal, up nearly 30% over the last 12 months. And last year, they were up over 60%. This year, they're up double digits as well. So a very strong track record in some of these Israeli-based companies.
Yeah, I like the story you had told about that, too, because, some of your clients, obviously, want to support Israel with their dollars, or they want to support Israel, or they believe in the nation of Israel. And so one way to do that is to invest in companies that are Israeli-based, and the Genesis 12 portfolio allows you to do that. So you can learn more about both of these portfolios. You can learn more about the PACE portfolio at PACE, P-A-C-E, portfolio.com. You can also learn more about the Genesis 12 portfolio, which focuses upon Israeli-based companies, at Genesis12portfolio.com. That's Genesis12portfolio.com. Genesis 12, of course, the first three verses, is where God tells Abraham, I will bless those who bless you and curse those who curse you. So I think it's a very unique portfolio, Jay. Great job on that. And I really appreciate all the hard work you're doing for all of our folks, constantly cranking out great analysis. You have a great radio show on our network. It is the Investment Themes and Strategies. What do you have coming up on the next show?
Yeah, this week I get a lot of questions from people that are just starting out. They've got $20,000, $30,000, $40,000, $50,000, and they're figuring out, Jay, you give us a lot of great ideas each week, but how do I actually implement this? So I this week go over, if you have $50,000, how do you allocate and create a portfolio? And then I present 20 fundamentally sound investments. So how do you pick and choose and find quality companies, and how do you assess the risk levels, that sort of thing? And then I answer a very important question. There's been a lot of statistics and studies coming out, and I wanted to present, are women or men better at investing in savings? And you'll be very shocked when you hear some of the results on the show this week.
Okay, I'll look forward to that. All right, so the Investment Themes and Strategies podcast, you can get there by going to ftmdaily.com/Peroni, just Jay's last name, Peroni. Or you can also just click on the podcast tab on FTM Daily, and you can just select Jay Peroni from that list, and you can check out his weekly show that's put out every single Saturday. Well, great stuff, Jay. Well, for all the folks out there who would like to get in touch with you, learn more about how you can help them, why don't you tell them about your services and how they can contact you?
Yeah, basically, we can set up a free 30-minute consultation to review their portfolio, see if they're heading in the right direction. They can simply either email me, it's Jay, J-A-Y, at ftmdaily.com, or they can give me a call at 888-664-6963. Again, that number is 888-664-6963.
All right, great, Jay. You got big Turkey Day plans this week?
Yeah, going to eat lots of turkey and spend some great time with family and friends. Looking forward to it. A lot to be thankful for this year.
Oh, I know it. Well, God bless you, my friend. Thanks for coming on the program, and we'll have you back on soon, and we'll look forward to your program every single Saturday. We'll be sure to tune in.
Thanks a lot, Jerry. God bless and have a great day.
Take care. Well, friends, that brings us to the end of our program. Thank you so much for choosing to allow me into your life each and every Tuesday right here on this broadcast. It is an honor and a privilege to be a part of your life right here every single week. And as always, I leave you with this final word, this time a clip from Mr. Phil Donahue. You may remember him. He's a former TV host. And while I don't agree with everything that Mr. Donahue says by any stretch of the imagination, he does point out something very important, and that is how the media is completely controlled by 5 to 6 multinational corporations. And because of this, they are so willing to do the bidding of Washington. I play you this clip because it's very provocative, and it reminds us of the power that belongs to the corporate-controlled media. Roll the tape.
Every major metropolitan newspaper in this country supported the invasion of Iraq. Think about that. That just baffles me. I mean, it just stuns. I guess I shouldn't be baffled. I am staggered by the fact, though. Imagine the New York Times, the Boston Globe, the Chicago Tribune, the LA Times, pick a Dallas Morning Herald, pick a newspaper. They all got caught up in this politics of fear. And there are millions and millions of Americans in this country who believe to criticize a president when we're running up to a war is irresponsible, unpatriotic, unfair to the troops, unfair to our president. We have to unite behind him, and that's why, and media gets right in line, and corporate media gets right in line. The new media may be the biggest antidote to this very deleterious nature of what we've come to, with only 5 or 6 companies controlling most of the airwaves. Corporate media did not want to oppose a president, especially if that corporate media was owned by a defense contractor, which my media, MSNBC at the time, was owned by General Electric, one of the 5 biggest defense contractors in the world. And here's this gray-haired guy on TV appearing to not respect Donald Rumsfeld. Donald Rumsfeld is one of their biggest customers. Corporate managers of media play golf with the defense establishment people. And so that, and also you couldn't ask why do these guys bomb these towers? You couldn't ask that, because that was blaming the victim. Every attempt at scratching your head and wondering was slapped down. All the energies conspire to promote war. Norman Solomon has a book, War Made Easy, in which he says if a president wants a war, he can have one.
Remember, friends, when you want the truth about the global economy, just follow the money. Have a wonderful and blessed Thanksgiving Day with your friends and family. I pray that you have a very safe and prosperous week. And until next time, God bless.
All of the information contained on Follow the Money is strictly for informational and educational purposes. The views and opinions of our guests and sponsors, including Tom Cloud and Jay Peroni, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry and Jennifer Robinson do hold their insurance licenses and may offer consulting on life insurance and fixed retirement income products. Jennifer Robinson is an investment advisor representative with Faith-Based Investor, LLC. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted